Thanks, everybody, for coming back after the break. I feel like I already got introduced twice already because my colleague, Anthony here, kept referring to me. And so he's now earned his 0.00004 cents that he was referring to earlier. So my name is James Wallace. I'm with Ripple. A little bit of background. I've been in the fintech industry for over 25 years. Fintech is not a new term, really financial technology. I spent most of my career at IBM. I was the global general manager for the payments industry, and then I was co-founder of blockchain in IBM in 2015. So when I decided to go from a 400,000 person company to a smaller company, I looked around and Ripple was the perfect fit for me because Ripple is payments, Ripple is blockchain, but then Ripple is also crypto. And the large enterprises back in 2015 weren't really sure how to deal with crypto. So I'm here. My current role is I lead the overall work we do with central banks and digital currencies. So the focus is CBDC, but we also work with stable coins. And of course, across Ripple, as Anthony mentioned, we're in the crypto space as well. So I'm going to talk a little bit about innovation. You've heard a lot about CBDCs. Hopefully, not too much of this is repeating what was said earlier. If it is, it's not repeating, it's just reinforcing, right? I'm just sort of making the point again. And then specifically look at CBDCs and some of the areas where you can innovate. I mean, there's different motivations in the market for doing CBDCs. My point of view is it's an opportunity to really innovate and make a difference in the world. And then I'll talk a little bit about the platform concept, which is essentially implementing a platform that other things are built on top of. We'll talk about that. And then a couple of thoughts on what it's going to take for CBDCs to be successful in the marketplace. So if we look at this chart, the history of money, it really is a history of innovation back from the days of barter, right? Barter was started off as a way of exchanging value. As you work your way along, most of you are probably not as old as me. I worked on, my first job in IBM was I was working in the check area. I was working on something called the IBM 3890, which was like a check sorting machine. Like you put checks in it, it sorts into different sort codes for banks. Not very interesting. But you see the evolution there. And where we are now is digital money, digital currency. As we heard earlier from many of the speakers, this really is, in some ways, a more transformational technology than any of the previous ones. We think about different forms of digital money. Again, this is reinforcing what was said earlier. Cryptocurrencies, in terms of native cryptos like XRP, Bitcoin, Ethereum, they're not all the same, right? They're not all created equal. I think what's becoming much more popular in the industry now is more sustainable technologies. So the XRP ledger and XRP is, there's no mining or proof of work or proof of stake involved. So the computational cost of validating transactions is almost zero, right? Very, very low cost and very stable in terms of pricing. Stable coins, again, not all created equal. You have a massive range from the algorithmic type stable coins. We all know the Terra story from a few weeks ago. And then now what we're seeing emerging is stable coins being issued by regulated entities. So I can't give you the names yet, but there's two projects we're working on, one in the UK and one in the US, working with banks that are regulated who will be issuing stable coins, and the reserves will likely to be held at a central bank, in a central bank account. So very different from the algorithmic stablecoin. We as Ripple work across all of these technologies. And then, of course, you've got central bank digital currencies, which essentially is the highest form of digital currency, right? Issued by the central bank, backed by the central bank, the most secure form. As a company who's working across the payment space, we're embracing all of these, and we see they will all play their part in the future of money. Today, cryptocurrency is less than 1% of all the money. Central bank money is less than 10%. The rest is all commercial bank money. So it'll be interesting to see, in 5 or 10 years, how does that look when it's all digitized? Will stablecoins be 90% of the market and CBDCs 10%? Or will CBDCs actually be allowed to grow and be a much higher percentage of the money supply? I don't know. That's for the policymakers to decide. Anthony mentioned briefly this concept, the Internet of Value. I think it's important to understand, where we came from and how we got there. If you look at the different phases of globalization, or eras of globalization, as we call it, there's really sort of three major phases. One was really globalization of trade, and you look back at some of the improvements made. I read recently that the cost today of shipping a T-shirt from Vietnam to the US is 4 cents. It's about the same as Anthony's salary, so it's a good analogy there. And then you move through to the information age with the internet, where moving data around is very simple, very fast. Anyone can, before you had email, an actual physical letter would take days to go around the world and cost, a lot more than an email transmission. And now with the Internet of Value, this is really, what we're trying to help the world get to is when you move value around, money is an example of value, move that around as easily as you can send an email. So that's basically the concept. I thought this was an interesting statistic. The World Economic Forum is predicting that 10% of the world's GDP would be tokenized by 2027. So tokenization is another term that's used. You can tokenize money, you can tokenize artwork through NFTs, you can tokenize your house. Anything ultimately could have a tokenized representation. And as it says on here, I don't normally read out the whole chart, but this is, I think, important to understand. So tokens, otherwise known as digital assets, are the avatars of value in the Internet of Value, right? So that's really the medium, right? And it has some unique characteristics. I think the one that is the most important here in terms of CBDC, transparency and privacy is important, but it's this astonishing agility, right? The ability to do things that in a very quick way that you can't have done historically. So new use cases, new different financial tools, and we'll talk about some of those as we go through. In terms of the overall global financial system, this is our perspective. We think it's going to be hyper efficient, which means very fast and very inexpensive. Again, this goes back to this Internet of Value concept. Dynamic. That means things can move quickly, things can change quickly, things will adjust quickly. I think gone are the days where you build a system and it lasts 20 years, right? Those systems are still in place and they still have a role to play as the core, but building things on top of that, right, shouldn't necessitate changing the core. That's the agility of adding new features. Inclusive, so all people get access, whether they live in a remote area, they live in an urban area, they live in Africa or North America. Everyone should get access to financial services. And equitable, people should all be paying 0 or close to 0 transaction fees, right, wherever they are around the world, sending whatever assets they want to send around the world. So CBDC. This is a chart. This is actually an old chart that I've used a lot, and I'm not sure I like it anymore. But I'm going to just I'll explain why. Right. So this is something we did as part of our strategy about 2 years ago. It's like what is the interest in CBDC? Why are people focused on it? Right. One example is a desire, and in some countries the reality of cash being reduced as a means of payment. Others was like the rise of other CBDCs. So I do work in the US. We work with the Fed, and we work with the academic, a number of universities that also work with the Fed. And the geopolitical impact of CBDCs is one of the topics that we've been working on. And when China announced the digital yuan, that suddenly made the US Fed, wake up and go, oh, hang on a minute. This is scary because the dollar is still the primary currency for global trade, reserve currency, and if the digital yuan becomes widely used outside of China, that could be a threat to the dollar. So that sort of got them scary. And then The next one was DM, right, or Libra, as it was, right? Then people were like, hang on, a private global currency, that's going to like mess up the whole banking system. Help. So, and then, you know, the need to reach the unbanked. And I would say the two in the middle, this is the reason I don't like the chart, they're valid points, but they're all the sort of negative, right? It's like a defensive play, whereas I'm much more interested in what are the positive things that we can do, not just the defense mechanism. But, you know, those are some of the points. So what are the opportunities with CBDCs? What is it, you know, people keep saying CBDC this, CBDC that. What are the real reasons or benefits for implementing a CBDC? There's lots of them, right? This is one that's talked about a lot, particularly on the wholesale side, which is, you know, enhancing the existing payment system, doing things faster and cheaper and more reliably, right? I think Anthony, and I think maybe one of the others talked about the resilience of using blockchain technology, so no single points of failure. So very resilient, both domestically and cross-border, right? A lot of countries that we talk to think initially domestic for CBDC. That's a sort of easy starting point. But cross-border actually has more frictions, right? And so the technology can actually yield a greater percentage benefit in cross-border. Financial inclusion. I think actually the next speaker will be talking about this a little bit, so I'm not going to dwell on it too much. It's really access to financial services for everyone is ultimately the goal. The problem with the current system is that commercial banks exist to make profit for their shareholders, and servicing members of the population with very low income or no credit history, various different circumstances, they just basically can't make money serving those customers. So there's a big gap in the market that's already starting to be filled with fintechs and other financial institutions where if you don't have all the legacy of the banking system, you can create lending products or facilitate microloans. There's all sorts of different use cases that you can do very, very, very inexpensively. Anyway, I'm sure the next speaker will go into that in more detail. Foster innovation. Interesting. No picture. Okay, well, this is really the sort of, I'm going to go into this into a little bit more detail because this is part of the key part of the presentation. But the technology itself that we're talking about here, so blockchain or DLT, does facilitate, rapid development of new ideas and new initiatives. I mean, just to give you an example, traditional payment systems have taken a long time to develop, and they're very hard to add things to. Right? It's very expensive, time-consuming, lots of testing, and all sorts of things. With this technology, you can very rapidly create a prototype, like in literally minutes or days. Right? You can create new ideas. You've got over 20 million software developers in the world across all different types of platform. I don't know what the exact number is in crypto, but it's certainly more than 1 million. You can get access to those people with their bright ideas, right, and bring those ideas to market very quickly. We're talking to a number of our partners that we have. They can create a new use case. They can implement it in a prototype environment really quickly. Right now, that's not the same as going to live production. You go into live production, you have to do lots of testing and get the approvals from various regulators. But the ability to do things super fast is incredible. Some other examples. I think tomorrow there's going to be a lot of discussion on DeFi, but DeFi is massive potential. You can use CBDC or other digital assets. This is not unique to CBDC, but I think CBDC has a role to play. P2P lending, that was the example that Anthony mentioned in Palau. Micropayments, right? This is a really big area where people, get paid royalties, fractional royalties, maybe smaller than an individual unit of currency than today, right? And then the other category where there's quite a lot of discussion going on is around government use cases. So, the government wants to issue financial aid to people, in the US, this is probably a famous, awful story, right? In the US, when COVID hit, the government was handing out money to people. They were sending checks. You know, that old-fashioned, the bit in the middle of the timeline, the bit of paper? And they were sending them to often the wrong people. They sent them to people that had passed away like years before. It was a big mess. And then when people got the checks, they could spend it on whatever they want. You know, the electronics stores had a boom, right? People bought new TVs. They didn't use it for, you know, food and rent. So this idea of programmable money is an interesting one. You know, again, it gets into politics as well, right? So I'm not going to say necessarily what's right or wrong, but you can send money to citizens, and it's like you have to spend it by a certain date, and you can only spend it on certain goods and services, right? So those are some other examples, which to do in today's world is more complicated and problematic. Another one, which is this is getting a bit more technical now, so I won't go into the complete technical weeds, but there's a lot of siloed payment systems around the world. You know, one of the countries we're working with, they have telcos that have e-money, right? And they have the banks that have bank money, and it's very hard to interoperate between them, right? So we didn't think about this originally, but one of the use cases for CBDC that has emerged over the last 12 months is actually as a platform for value transfer. So you can you send from your telco money or your loyalty points through a CBDC as a common platform, common sort of standard pricing into other verticals. We have, if anyone that's interested, we have like a 50 chart version of this one chart, but not for today. But it's a super interesting use case, sort of innovative use case with CBDC. Now, at the end of the day, after all of that, you know, the central bank's role is financial stability in the country, right? They have that is the primary mission, right? They have other responsibilities, but they have to factor in all of this innovation and what are the risks associated with that, right? And ultimately, you know, there's a balancing act here, right? There's checks and balances that are required on this innovation, and the central banks will always take that position. So, platform for innovation. This is really getting into a little bit of what we're doing at Ripple. We've adopted I'm sure you're all familiar with Maslow's hierarchy of needs. Anyone that did sort of basic psychology at school or college. We've sort of adapted that approach here. So we kind of view from the bottom up. These are some of the sort of critical requirements you need for a technical platform for a CBDC. So if you start at the bottom, you know, the basic table stakes, right? You need to have stability and resilience, right? The platform needs to work. It needs to be stable. It needs to be reliable. You know, next one up is security and, you know, trust and speed, right? So it's no good being stable if it's not fast, right? So it's got to be stable and fast. And then you've got to allow access to different participants, not just the banks, right? Other financial institutions, startups, right? Again, the more inclusive, the better. And then it gets more interesting as you go towards the top. So interoperability really is, I think, one of the key topics, right? Interoperability, you'll hear this term all the time when it comes to CBDCs. Interoperability this, interoperability that. In my book, there's really sort of three parts to it. One is interoperability between different CBDCs. They won't all be using the same technology. So if you buy into the multi-CBDC or cross-border CBDC that Daniel talked about earlier, you know, you need to have compatibility at a technology level. They don't have to all be the same tech, but they have to be interoperable. They also need to be interoperable with what I'll call the real world. So current payment schemes, you know, point-of-sale terminals at merchants, right? And again, I'm talking retail here. It has to be interoperable with that. And then also it has to be future-proof for the future, so interoperable with other forms of digital currencies, so interoperable with stablecoins and native cryptos. And then the top one really is, I think, to me, is the most important reason for doing a CBDC, right, is these what I would call overlay services. So using smart contracts or programmable money to, you know, for example, some of those government use cases, that's really the key. From my point of view, if a CBDC is only doing wholesale interbank settlements and only doing an alternative to cash, then you're missing the point, right? I think CBDC, those are table stakes, right? Those are the basic components. That's the platform that you need, the stability, the bedrock. But enabling all these other innovative ideas on top is really the name of the game. So this is the approach that we take with our clients as we build out our product roadmap. We work, all the core stuff is what we're doing, and then we work a lot with partners at the top, right? Bringing in different wallet providers and bringing in different identity providers and so on and so forth. You also need to think about all the participants. So central bank digital currency, by definition, is issued by a central bank, right? The clue is in the name, right? But there are other participants, commercial banks. Almost certainly, I think pretty much every country is probably going to have a two-tier model, right? So central bank issues the money, distributes for retail purposes at least to commercial banks, and commercial banks will be doing KYC and onboarding, setting up wallets for us as citizens. But then you've got other non-bank financial services in there, like wallet providers. So you've got to think about this whole ecosystem as you build out your strategy. It's not just the central bank piece, right? It's working with the whole set of stakeholders. And again, as Anthony mentioned, a lot of that is around explaining what the technology is, how it does, the art of the possible, and educating people as they go through. And then I definitely won't go through this in detail, but this is really the sort of the life cycle of the what we call our CBDC manager, right? Which is the software we've built that interacts with the ledger, enables the central bank to onboard other participants like commercial banks, mint the money, distribute, transact, redeem, and if necessary, destroy. Because at the end of the day, part of the responsibility of the central bank is money supply. So it's the same as central banks burn dollars or euros, you can do the same with digital currency. And then all these other layers are really just things under the covers. This is more some of the elements I talked about in the pyramid, the hierarchy of needs. So, you all still with me? I see a bit of some nodding and stuff. He's getting extra pay for nodding a lot. Good job. Okay, we're on the home stretch now. So these are some of the factors I think need to be taken into consideration, right? If you're a central bank or a commercial bank, and I think we're seeing increasingly commercial banks are being part of the project. In Bhutan, we've had 2 of the commercial banks working there. In Palau, we have US commercial bank and a domestic commercial bank. The commercial banks, are going to be critical to the rollout and therefore need to be included from the start. This is the balance here I mentioned before, right? Which is control versus innovation. I think the sooner regulators understand the tech, understand the art of the possible, and get involved, then they're more likely to embrace innovation. When you don't have clarity from a regulatory point of view, that's when you start getting into problems. So in the US, there is no clarity. Other markets, there's a lot of clarity, and that's the disadvantage to the US, right? Because they are being restricted in innovation because of this lack of clarity. Cross-border, again, my only point here is, CBDCs are more than the basics that I mentioned, right? So CBDC is all about these interesting services and cross-border. So therefore, start thinking about cross-border from day one. Don't think about it as an afterthought, right? It's essential to think about that, because if you're not thinking about it, your other neighboring countries and other markets in the world are thinking about it, and you don't want to be disadvantaged at all. Identities, we've not talked about this. This is a sort of, in the whole blockchain space, identity is like a really big topic, right? You do self-sovereign identity, is it government-issued cards? It's a whole long topic, but the reality is, it needs to be solved, right? If you want people to be able to onboard quickly as a retail CBDC user, you need to figure that out. Now, some countries, by design, don't want to mandate a national ID card or passport. I mean, Australia is one. They've had referendums several times about this, and every time the answer's been, we're not going to force people to have a national ID card. So, separate discussion, but it's something that needs to be considered. And as is non-bank channels, right? I think the commercial banks get a little nervous on this topic. They think that they're going to be threatened by fintechs and startups and all the rest of it. But I'll tell you, the commercial banks that are most forward-thinking are being much more innovative now, but they're still not as fast as they could be. So I think to encourage greater competition and to encourage greater innovation, I think allowing access to these non-bank channels is really important. Now, policy decision would be, would you allow them to actually hold accounts at the central bank or not, or would they hold accounts in a commercial bank? So again, that's a sort of more of a political and policy decision, but the more participants, the more innovation, right? It's pretty straightforward. And then interoperability, we talked about that one, so I'll skip over that. This is super important, the concept of public and private partnerships, not just leveraging the technology that private companies have created, like the XRP ledger and the CBDC manager, but actually having both groups working together, right? Not just on policy things, but working on what is the future roadmap for this country? What do we want to achieve both domestically and cross-border? And how can we leverage all the great qualities of the central bank and leverage all the great qualities of the private sector to come out with a great outcome? And then last chart is kind of a similar point, but often as new technologies emerge, you have the visionaries, right? And they have these great ideas. Like the people were thinking about what the internet was going to do in 1998, right? Or 1996, before it really was widely adopted. You can't do that in isolation, right? The CBDC is such a fundamental capability for a country. You've got to look at the policy and the technology together, right? So the technology at the end of the day is just boring tech, right? It's an enabler, right? I think both Daniel and Anthony said it well earlier, like in 10 years, we shouldn't be ever using the word blockchain. It's just things happen, right? Policy, very important. There's some basic things, like in some countries, they don't even know whether digital central bank money is legal tender or not. So those are some things that need to be thought about. And then things like, when it comes to privacy, some countries are thinking, well, any transaction amount, below $100, would not be recorded or tracked. Other countries are saying, well, maybe it should be $50 or $150. And then when you do cross-border, how does that sort of balance out? So policy is fundamental in how a CBDC gets rolled out. But really, the key point I would leave you with is the one on the right, which is, we're a mixture here of different, technologists, bankers, fintechs, crypto experts, journalists, all the rest. We can talk about this because it's interesting to us, but if the users, and again, I'm focused more on the consumer, if they don't see value in it, they're never going to use it, right? So they have to, the CBDC has to be implemented in a way that provides value to consumers and value to businesses. So whether that's faster, cheaper payments, whether it's access to loans that they couldn't get before, whatever the use case is, there has to be benefit. Otherwise, the whole of the rest of this conversation is a waste of time, in my view. This really is the most important aspect. So with that, I would say thank you very much. If there's any questions, I'll be happy to take questions.